ExxonMobil just released its third-quarter earnings report, and it's packed with impressive figures and strategic moves that highlight this energy giant's resilience and ambition. From record-breaking production levels to bold investments in green tech, ExxonMobil is making waves across the energy landscape. Stay tuned as we dive deep into what these numbers mean, the future trends, and why analysts are paying close attention to ExxonMobil's evolving strategy. In Q3 2024, ExxonMobil reported earnings of $8.6 billion. While this is a slight decline from Q2, the performance is strong considering the impact of lower crude oil prices and rising exploration costs that many companies in the sector are facing. ExxonMobil's cumulative year-to-date upstream earnings are at $18.9 billion, a noticeable increase from the $17.2 billion achieved over the same period in 2023. Hi, welcome to the channel. Here, we tell the stories of the largest companies in the world, who built them, how they started, and what they're up to these days. If you're into this kind of topic, make sure to follow so you don't miss any of the upcoming videos. To understand how ExxonMobil achieved this, let's look at production. The company's net production volume increased by 14% year over year, largely due to successful operations in Guyana and the Permian Basin. These regions are central to ExxonMobil's growth strategy, and the results reflect the efficiency and innovation the company has implemented across its upstream operations. The increased output is particularly significant as it helps ExxonMobil offset fluctuations in global oil prices, ensuring stable revenue streams. ExxonMobil's upstream segment, its oil and gas production arm, experienced a minor decline in quarterly earnings but remains robust year over year. In Q3, the company achieved 4.6 million barrels of oil equivalent per day, marking ExxonMobil's highest liquids output in 40 years. This increase in production is especially notable given that the industry overall is seeing reduced outputs due to shifting investment focuses and regulatory pressures. ExxonMobil's operational strength in Guyana and the Permian Basin is setting new standards for production efficiency, with Guyana alone projected to add substantial long-term value as it becomes one of the most productive oil regions in the world. These results showcase ExxonMobil's emphasis on scaling production in areas that are both high-yield and cost-effective, helping it stand out in an increasingly competitive global market. The energy products segment, which includes ExxonMobil's refining and fuel businesses, faced challenges this quarter. Earnings declined year over year due to lower refining margins, which reflect the industry-wide trend of compressed profit margins in this sector. However, ExxonMobil's resilience shines through as it managed to improve sequentially within the third quarter, thanks in part to expanded operations at the Beaumont refinery. The expansion added 250,000 barrels of daily refining capacity, contributing to more efficient production at a time when fuel demand remains stable, but competitive pressures are high. Additionally, ExxonMobil optimized its maintenance schedules and strategically managed its derivative contracts to offset some of these impacts, showing its adaptability. This segment's gradual recovery hints that ExxonMobil is prepared for future demand shifts, even as fuel refining remains a tough sector. ExxonMobil's Chemicals and Low-Carbon Ventures segment reflects the company's vision for sustainable growth and a reduced carbon footprint. The company's low-carbon projects, especially in carbon capture, are gaining attention as governments and investors prioritize environmental sustainability. ExxonMobil is pushing forward with several carbon capture projects and advanced material ventures in electric vehicle battery materials. By working on high-performance graphite production, ExxonMobil hopes to increase electric vehicle battery range by up to 30%, which is a potentially transformative advancement for the automotive industry. Moreover, ExxonMobil has begun licensing its technology for composite rebar production, which is used in construction to reduce carbon emissions. This diversification not only gives ExxonMobil an edge in traditional energy, but also positions it to lead in sectors critical to a low-carbon future. As a long-term goal, these initiatives help ExxonMobil tap into a projected $30 billion market by 2030 for electric vehicle battery materials and other advanced materials. Analysts are closely watching ExxonMobil's performance, as the company has not only demonstrated consistent profitability, but also made significant strides in diversifying its portfolio. The increase in dividends for the 42nd consecutive year reflects ExxonMobil's commitment to its shareholders, with a total of $9.8 billion returned to shareholders in the third quarter alone. This kind of shareholder return reinforces ExxonMobil's reputation as a solid income investment, especially for those looking for stability amid broader market volatility. Beyond financial returns, ExxonMobil's growth strategy indicates a long-term vision. The company's investments in carbon capture low-carbon materials and electric vehicle battery technology show a forward-thinking approach that resonates with sustainability trends in the energy sector. By balancing traditional oil and gas production with pioneering efforts in renewable technology, ExxonMobil is setting itself up as a leader in both fossil fuels and the next-generation energy market. One interesting point is ExxonMobil's strategic move to target an anticipated $30 billion electric vehicle battery market by 2030. This goal aligns with the company's broader environmental strategy and demonstrates a clear shift towards energy innovation. With electric vehicle adoption accelerating worldwide, ExxonMobil's investments here could position it as a primary supplier of high-performance battery materials, further diversifying its revenue streams. In summary, ExxonMobil's third quarter 2024 performance showcases a company that's balancing strength in traditional oil and gas with a forward-looking investment in sustainable technologies. Its record production volumes and high dividend returns make it a robust option for investors, while its low-carbon ventures point to a promising future. As ExxonMobil continues to navigate a transforming energy landscape, it stands as a fascinating case of an industry giant adapting to modern challenges. Don't forget to like and subscribe if you enjoyed this analysis and want more insights on the world's biggest companies.